So we talk a lot about the U.S. money supply, or at least we have covered it several times. But what we've recently seen is that there has been an increase in the Chinese money supply. So unlike the M2, M3, M4, and these things are fairly well known with respect to how the U.S. and the Federal Reserve work, the CCP is more in control of how their money supply looks. And there's a chart that I saw the other day that gave me pause. I didn't really know how to interpret it. So I thought, we got to have a discussion about what is going on with the Chinese money supply. So, Lucas, help me understand this. Are we seeing something that looks similar to what is going on in the US, or is this something different? And does it have any tie to their whole Belt and Roads initiative?
Um, yes. You know what? Let me start with the Belt and Roads Initiative. So the Chinese use Belt and Road Initiative to create more trading relationships with foreign countries, and with more foreign countries and a wider base in what their economy is, who they're trading with, um, they can ostensibly, or they can not ostensibly, they can increase the number of yuan that are in existence because they need more for those trading relationships, and that includes the United States. Now, what has recently occurred with the change in the the definition of what their M1, and in these M1, M2, M3, M4, these names that we have for different definitions of what money is based on, um, the liquidity, or how easy it is to move money around. So what they recently did was to change the definition of M1, and in doing so, they added what personal demand deposits and non-bank payment reserves into the M1 supply. So that wasn't creating money like we think about in terms of making a loan to another country for some infrastructure project that you're also uh, using Chinese workers and Chinese resources, and have some sort of term of a contract for the use of what that infrastructure is going to look like. And I'm thinking like, a port in Peru, or a railroad through um, through Kazakhstan and Kyrgyzstan, and other farms in Africa, other Belt and Road initiatives. So when I talk about Belt and Road Initiative, um, I've never seen a comprehensive description of what China's Belt and Road Initiative is, but that's sort of the idea behind it, is increasing the foreign trade relationships with China. Like maybe you would think of NAFTA in the United States. Um, and the United States likewise has increased the number of dollars throughout the year throughout the world by establishing different trade relationships with different countries, and providing loans to those countries, terms for those loans. Whenever you make a loan, you magically create money. So that's one type of way to create money. But this shift in the definition of what can be considered very liquid, there are other things going on there. So I'll pause because I just went on a rant. Everything clear as mud?
Well, the whole idea being that money gets created by a certain country, and then there's some cycle where it's used to buy stuff from that country. It's increasing the economic power projection of the particular country that's doing it. I imagine that this entire thing that China's doing is to make a play for the influence space that the US has previously had. Is that kind of the summation of what we should think about when we're thinking about the Belt and Road Initiative?
So yes, well, one, I think the we have a lot of different ways to think about money, but maybe the best way to think about money and the creation of money is an accounting or a reflection of an agreement between two parties. So if I said to you, I'll loan you this, and I want it back in the future, and it will be for this amount, like that's a creation of money right there. Because it might be accounted for in like hard currency dollars that we like set on the table or put in a reserve, but what we've actually done, especially if we're not dipping into that hard currency, is we're making money. And so in whenever the federal government of the United States lends money to the states, or Elon Musk talked about these magical money printers. They're just a promise of you know something to be delivered in the future. So that's how money gets created. It's not it's closer to the truth than this notion of you have to go out and dig in the ground for silver or for gold or for some other precious metal. Because the actual money that got created when those were found was the notion of value that existed between the miner and whoever he was passing that off to. So um, and and as to the question as to is China doing this in a response to the dollar, the power of the dollar? Yes. The part of the reason that the United States has been able to maintain dominance in the world is because of the number of dollars that exist. And they were able, we were able, the United States was able to massively inflate the amount of paper that or dollars that were in existence in relation to the gold of the world. And part of the reason that happened, or was like maintained confidence throughout the world, is because the other countries of the world, or the people of those countries, weren't aware, didn't know, or couldn't prove that the United States was inflating the number of dollars so broadly. But then once the massive amount of dollars existed, the United States had more liquidity. So we created a giant liquidity pool around the world. So in the 90s, as the Soviet Union collapses, as money becomes more electronic, and accounting becomes more electronic, and it becomes more apparent to the world and provable what has occurred, China immediately began to change their policies so that they could inflate the amount of yuan, because they understood that countries around the world could be dubious or of how the dollars were created in the past, but could believe in the ability of accounting standards and electronic tracking, or their power to monitor and to adjust for a number of dollars that were created in the future.
But
And as
China
long
doesn't. But China doesn't have any tie to gold within their currency, right? I mean, heard a lot about the Chinese buying gold, that they're taking delivery of gold, that there is going to be something with BRICS where gold is going to have some tie into how the BRICS currency is going to work. But the yuan doesn't have any of that. This is just a standard fiat currency that can be created out of thin air, and I mean, is in the way that we think about, in the ways that you've already described in the contracts and agreements that are happening. Am I right here, or is there's no gold back into the yuan, right? I guess that's just the first question that comes to mind.
well, I would say that that's a complicated answer, because China both has a large amount of gold reserves, that neither the dollar or the yuan is pegged to the weight, or the amount of gold that they have in weight. But that is in part because and I would say that China has an expectation of the world moving back to a gold standard instead of a gold exchange, or hashtag a dollar standard that we're currently on. So yes, China has a large amount of gold. We don't know how much. China also in the past actually favored silver over gold. So I would imagine that China also has a very large amount of silver reserves. But the move back to a gold standard, away from a gold exchange standard, is going to be something altogether. It, I would say that they are preparing for both futures, and that both are probably possible. So you both want to increase the number of yuan so that you can have liquidity, so other countries around the world can use your currency to make exchanges in. But you also want to be accumulating gold. So if and when gold is used as the as the basis of what the value of your currency is, they can be ready for that in the future too. Make sense? I don't know if it does to me.
Well, I think that there's definitely a interplay between the two, and I recognize it, and it's been on my radar as far as them accumulating gold, and you can definitely see evidences of the fact that the world is moving towards some sort of a backing. And I don't think there's any there's no mistake that we are hearing Bitcoin and gold in the same phrase, or that Bitcoin is digital gold, because this idea that we're just going to have unconstrained creation of money in the hands of a particular party, I think the world is moving away from that notion completely. So to the extent that we're noting that China is aware of this and is very much accumulating in the anticipation that this is where the world's going to be. Yes, I think so. It does make sense.
Well, and I think it also goes back to these notions of accounting standards, and back to, like, what are the definitions? What are accounting standards? And this is where having something like gold or silver can be important, because in some way a fiat currency can be, one way that you could understand that is it's backed by the taxes or the amount of economic production of a company, or a country. But when you dig down into what that actually means, and is that analogous to the way that other countries report, what their economy is, what their production is, then that can get very sticky. So it's nice to have something like gold, and some sort of notion of somebody holding more of it. But the or China rather, is not going to sit idly in the world of today with the massive amount of production that they have, rely on the dollar for the liquidity, for world trades, you know make all of these things for other countries around the world, especially the United States, and not buy gold, and let the United States buy gold at a cheap price in dollars. So they've certainly been buying gold. I don't know how much gold that they hold. If we moved to a world exchange system that's based on gold holdings, I hope that there are requirements for the proof of reserves, the verification of what countries' reserves are. But going back to also what is happening with money whenever the United States and China are changing their definition of what M1 is, and going to, like, notions of liquidity. um, we we see a we see more liquid money in the world, and that is because the banking system can't the banking system has long had the ability to move money around more quickly, but they want to sit on it. So think about the clearinghouse and the fight over the clearinghouse window here in the United States. When PayPal came around in the late 90s, I think the clearinghouse window for clearing a check that was written and passed through the bank, the federal clearinghouse window, was at 2 weeks. And that was sort of maddening, because people could see that it didn't take 2 weeks for a bank to mail a check to a federal clearinghouse, and the clearinghouse to check that against the other banks, et cetera, et cetera. Like once we begin to see the implication of electronic money and electronic accounting, people said, well, how come this can't be a lot faster? And in the wake of PayPal, that window got closed down to, I think, 3 days eventually. And in the wake of 2020 of COVID, and some of the issues that came from the money that was created, the quantitative easing and the money that was created then, we saw FedNow. Oh, you know exactly where I'm going. And
Well,
FedNow,
I anticipated it because yes, these are important things, and the longer you can sit on money, the more money you can make. So that's 100% correct to say something's right here if you're waiting this long to clear this payment, because if you can trap money for any appreciable amount of time, you can make a substantial amount of earnings just holding money for some period of time. I mean, this is the essence of how stable coins make money, is they're just holding on to the underlying asset, and they're making money off of it by moving it around or by putting it to work in some fashion. And it can be risky if they do the wrong thing, but if they do something that's relatively risk free, you can make almost free money as long as you have a substantial amount of it.
yeah, and I think a lot of people think in terms of, setting prices as what a government does whenever it's managing money, managing the economy, but more so it's about managing the time horizons of the players and making sure that all of those horizons don't converge at the same point. So you want to have a Federal Reserve rate that is a long time window, and then something that is a shorter time window for banks, and then an even shorter time window for people. Like, think about money market accounts, and how those are nested on top of each other. And then think also of what goes on in the stock market. And the stock market is not the economy, it's a part of the economy. But the same, it has the same rules with regards to, um, n- to keep money moving around. You never want all of these time horizons to converge. If everyone wants to sell at the same time, longs and shorts, um, you know, micro traders and hedge funds want to sell all of their stock at the same time, you've got a problem on your hand. But if you're managing those time horizons so that people, institutions, whatever it may be, are have different perks for what their time window is and how they expect to make a return, then you can keep money flowing around. And that's exactly why the United States changed their definition of M1, and why China has changed their definition of M1. Or those two reasons, I should say. One, the technological reason that we have shortened the expected window of how long it takes to move money around. We've shortened that down because we have electronic cash systems, and two, because the government needs to continue to keep money flowing around, they're going to be adjusting to this. So when they changed the M1 definition, and I'm not a banker, but I imagine what this begins to do is to change the basis of what banks can do with consideration of their assets and the ability to lend more money around. And we talk to, or I talk constantly, and you push back that the United States doesn't necessarily make anything, that has a kind of a thin economy or a paper economy in which we are creating rules to encourage these different players to move money around, but that aren't necessarily in the best interest of manufacturing or industry. And in some way, when I look at what is happening in China, it is it is a step towards this financialized economy. Because China is looking at the United States and their trade with the United States and saying, "Oh, the United States is making very strong signals that they don't want to continue this trade relationship. We have built our economy around industry and manufacturing and making things for the United States, and then turning around and injecting the dollars that they pay, that maybe they've been magically creating over there into our supply. What are we going to do? We need to keep people um, engaged in some sort of game of life, and so let's try to grease the system so that it's easier for them to continue to move their money around.
Well, and it's interesting to see the United States trying to take the exact opposite tack. I mean, all this tariff stuff that's happening with Trump, and even with what's happened with the Fed meeting that happened recently. We're actually seeing that the president and the administration is trying to encourage domestic production. Now, this is of necessity a longer term time horizon, because you don't just bring manufacturing back to the United States in a day. Like, these are initiatives that take a substantial amount of time, but tariffs are the thing that starts to encourage domestic production, because if foreign goods coming into the country are more expensive, and yes, the tariff is definitely paid by the importer and passed on to the consumer. But the ramifications are is when you go to the shelf in the grocery store, or Home Depot or whatever, and you see a good that's produced domestically that doesn't have a tariff on it, and you see a foreign good that has a tariff on it, the domestic product is less expensive, and it stimulates domestic demand. And so if this initiative is successful, and it starts to bring back domestic production of lumber, raw materials, oil, gas, everything that the Trump administration has said that they wanted to do, then you start to get a circular demand within the economy of the United States, which is a large economy, which is a lot of money. And so if that money starts flowing back in on itself, it can have a lot of long-term stimulative effects, but in the short term, it can be very disastrous and dangerous to the economy if you've been mostly dependent upon foreign goods and you aren't producing a lot of things within the United States. That ramping up that production is not something that happens overnight. So I definitely hear you that we don't produce as much in the United States. We have been a net importer for decades, ever since the first rumblings of this happened with NAFTA back in it was the Reagan era, when Reagan started doing things to dismantle the U.S. economy that had come out of World War II. So we're seeing that the administration is trying to switch that around. So it's interesting to see China flipping to more of a paper economy and less of a production one, if that really is what's happening here. So it's an interesting concept to think about, that China may be trying to turn a corner on what they've been doing, and we're trying to turn a corner on what we've been doing.
Well, so there's something else to consider in this mix too, and that is the base, or the benchmark interest rate on the transmission of money. So and here that is the federal funds rate, or I think it's yeah, the federal funds rate from the Federal Reserve in China. I'm not sure what it's called, but China's benchmark rate is between 3 and 4%. In the United States, the Federal Reserve's rate is between 4 and 5%. And Jerome Powell just, signaled uh, in a meeting yesterday or maybe a couple of days ago that that was going to remain the same. Either way, 4 and 5%, 3 and 4%, or 3 to 5% is a pretty low rate. In the 80s, it was 8%, maybe 10%. Argentina recently had the rate as high as 80%, and I think it's at 40% right now. So um, you can see the financial, or the reliance on actual production looks a lot different, um, or how do I put this? an economy that is structured around production has a very different interest rate, and a much higher interest rate than one that is trying to encourage financial transactions, just buying and selling of things, and also investment. This finance is is much more, has much like fewer lower transaction costs when we see these low interest rates coming from the central bank or the central authority. So when I look at that, and I also think about previous attempts that the United States took to lower rates or lower prices, and I'm thinking of the stagflation in the wake of the 70s. So I think like we've had a realization of the inflation of prices coming out of COVID. And now the government is trying to figure out how to lower the price of eggs and reduce the amount of money in the money supply through their quantitative tightening that they've been engaging in. And part of that is like trying to raise the interest rate and put some of that away to burn that money that they absorb in through financial transactions. Um, I don't know how achievable that is. Austerity is very hard for people um, to engage in without having some political backlash and kicking out the politicians who are forcing austerity and opting for somebody who promises something else in the future. So this is why I thought it was so very interesting that Trump um, and the Trump administration canceled the penny, because there was a time whenever we thought about this notion of a fixed amount of money in the world. You know, how much gold is in the world, and how much currency has been laid over it. And now we're shifting that understanding of what backs money to, what is the economic production? What how many things have been mated, or how much trust exists between people who are engaging in finance, and that is a different underpinning of the system. But if that is the new system, then then a return to lower prices and a lower amount of money in the money supply is not necessary, because we can raise the minimum wage. We can raise it, and we can continue to add zeros to our currency bills and our the billions to trillions to quadrillions to whatever's next, that is the total aggregate money supply. And when I see the United States um, ending the limitation of this notion of a penny, it costs 2 cents to make a penny now, and a penny buys a 20th or a 100th or a 1,000th of what it bought in the 1920s. Just get rid of them. You know, pennies are holding us back, and at
Well,
some point,
it's the natural progression of the inflation of the currency. I mean, if you keep making dollars worth less and less and less, at some point, the minimum amount of the currency needs to move up. And there'll come a day where we will face a similar type of production issue with the nickel. I mean, we actually have seen this multiple different times where they change the metal assay. And when you start to think about the actual metal value in the coin exceeding the value of the coin, then there's the impetus for people to just slag it, melt it down, sell it off for the metal that's actually in it, because it no longer represents what it's supposed to. But this is partly why, when the Constitution was enshrined, it said the money will actually be in gold and silver, and that the coinage is supposed to be the actual gold and silver. And if you're using it that way, then I mean, you're trading the underlying metal as the thing that is the currency. Uh, do you foresee that we'd actually return to metal coinage like that, with what you've been seeing with how the U.S. is is taking physical gold back, or are we going to start having gold in our pockets again to transact business?
No, I don't think we're going to have gold in our pockets. I think that we are going to see a greater uh, a greater differentiation between private and public monies, and even when it comes to public money, like what is the money of a certain taxing district, and how much do they owe to other taxing districts? Now, I don't know if the United States goes to honor the Constitution. It hasn't paid attention to it since 1913, and maybe even since 1862. Um, but I do think that whether it be the federal government or the state governments, that we are going to see all governments move to this notion of better accounting tools, and paper money, and constantly inflating that money supply. And I think we'll see nickels and quarters and all coinage go by the wayside of the dollar. Like maybe we see the United States Treasury actually return to gold and silver and to some sort of stable coin that's based on those, and we begin to consider the dollar a private money that's owned by a private banking consortium called the Federal Reserve, and that we use that, and so we have no expectation of it to be bound to gold and silver, and uh, to me that's somehow in that complicated future is where we move to. But I don't see democratic republics and countries that can vote politicians in and out of office being able to stomach a austerity and a suppression of prices. Many politicians have tried it. Herbert Hoover tried it. Paul Volcker tried it. Other countries have tried it too, and it doesn't work. So,
I seem to remember Britain went through an austerity phase as well recently. Do you remember that?
well,
Like there was this big push for, Britain's
you're ta-
austerity.
you're talking about the euro banking crisis, the Grexit before the Brexit,
I would
or
have to look it up. I thought you would remember it well because I mean, it was within recent memory is that the word austerity was repeated, repeatedly, and I think it was by that
Well,
the prime minister of England at the time. It was who presided over Brexit. I thought that was. Let me look
Boris
up.
Johnson. Yeah,
Boris,
Boris
yeah,
Johnson.
Boris Johnson.
Well, so the it's not the first time. I mean, even Margaret Thatcher had to deal like was Margaret Thatcher financialized the British economy and got them off of coal back in the 80s. And so they were facing the same issues here. Um, we also have this narrative of communist or socialist versus capitalist countries. And when we think about managing the economy, I think one way to think about or to understand that best is to say, oh, a capitalist country is exporting the is ex is turning to other countries um, to to continue the economic system, and socialist countries were turning inward and trying to and we're thinking about the distribution of their currency to those people who lived in the country. What was fair, because uh, yeah, the austerity period of the euro forced Britain out. That was when Brexit occurred. Greece also wanted to leave. Remember, Greece and a couple of other countries, and that happened in the wake of the the global financial crisis, which was in the wake of a lot of which maybe was the admitting of the fact that the United States had been had been increasing the money supply and shipping that around the world. So when I think about what happened during the global crisis, I think a lot about the quantitative easing that the United States had begun in the wake of 9/11, how it had had debt issues leading into that, and had been mired in this understanding of or this notion that the money supply needed to return to previous levels, and how hard that was to stomach in American politics, and how that got pushed out into investment in other countries in the world. That's where the BRICS is not originally alliance of other countries. BRICS was the investment portfolio of leading into the global financial collapse. Here are all these emerging economies that are being brought into the dollar system, and whenever there was a great a great retraction of faith in finance, money was taken from those countries first. So they felt the pain of the drying up of I mean, again, when you create money in the future, when you have a financial agreement, if all of a sudden you don't trust the other side of the party, then that money dissipates. And and the United States did not feel the pain of a contraction of the money supply as much as we maybe should have in 2008, because so much of the money that had been created was out in other countries of the world. And look at what happened in the
Yeah, I
wake.
remember the term is that that used to be said was the U.S. was exporting its inflation, which I
That's
thought
a
was a
great,
really fat. Yeah,
yeah, that's a great, well put, well put. And so then look at what happened in Brazil, and what happened in Russia, and what happened in India, in to a lesser extent in China, because they had prepared so well for it. But all of these places where we were exporting our inflation, whenever that money disappeared, all of a sudden the country was broke. And so you have the fights between the quote unquote left and right in Brazil, the Lula Bolsonaro. You have Narendra Modi, and what gets expressed as tension between Hindus and Muslims in India. No, what happened was, money that was being inserted into those economies throughout the world suddenly disappeared. And the politicians had to turn around and say, "Oh, we can't rely on a belief in dollars that are being injected into this. We have to figure out how to divvy up what we already have, or what we have left here inside this economy." And that is a tough political question. This is why Britain left the euro, and why Greece, global South countries wanted to. I say global South. Some of the countries of the south of Europe wanted to leave. Like, all of a sudden, there were less dollars that were being injected into Europe, and countries that did not have as high as an output in their economy. Everything was all well and good whenever there was new money on the table all the time. But all of a sudden, France and Germany said, wait a second, we're contributing this much. Why aren't you contributing this much? Why aren't you taking in all of these taxes from your citizens? Italy, Greece, uh, and and uh, and the people of Greece said, "Well, we don't believe in taxes. We don't like to collect taxes, and we want, if you're going to make us collect all these taxes, we want to leave." So, uh, anyway, tangent there. But this is what we may be on the brink of again. And countries are responding by trying to encourage a financial economy inside their own countries, so that they're not relying on money pouring in from other countries. And Europe, this is also expressed in what's going on with NATO, what's going on with the Doge sort of stepping, or because we should also think about how money gets injected into other countries outside the United States. In some way, it's through the stock market and through that investment. In another way, it's directly from the government through foreign aid. And another way, it's through the State Department and through the NGOs and the hidden cutouts that can like more subversively inject cash. So we're seeing those being drawn back, and through tariffs, through the actions of Doge, through congressional budget tightening, and countries around the world are preparing themselves. China may be the leader of them. So we're at 40 minutes though, so I don't know if you have any other questions that you want to close it out with, but that's sort of what I look at when I see what's happening here with changes in M1 definitions.
It's a fascinating set of topics and loved thinking about these kinds of things. We'll definitely have to keep a close eye on these trends of financialization, and if we see other interesting stuff come up, we'll cover it more. But I think this was really good discussion to think about how other countries are either mimicking what we've done or that they're taking control of their own future in the wake of the de-dollarization of the world. So yeah, definitely a fun conversation. We'll see you next time on FOMO.
All right, till then.